Right now to this, Elon Musk poised to become the world's first trillionaire as SpaceX debuts on the NASDAQ today. It will complete the largest initial public offering in history. Trading begins with a price set at $135 per share. That gives SpaceX a valuation of nearly $1.8 trillion. Some skeptics, though, say Musk is overselling the value. The rocket company is not currently profitable. In fact, it's burning through cash to stay in the AI race. William Cohan is the co-founder of Puck and a New York Times best-selling author. He joins us now to discuss this. Bill, good morning to you. You've got a lot of viewers out there wondering, should they invest? Is this worth their time? So the trillion-dollar question for you, is SpaceX, from what you can tell, worth its valuation?
Well, this is the summer of the gargantuan IPO. This is one of three. SpaceX, Anthropic, and now OpenAI. They're all extremely expensive companies because they've been private for so long with so much venture capital already invested in them. So now it's time to go public. A $1.8 trillion valuation, raising as much as $86 billion, SpaceX. There's been nothing like it. It's trading. It'll be, if it's priced that way and continues to trade that way, and it probably will because that's the way IPOs are designed, so that they trade up at 100 times revenue. That is extremely expensive. On the other hand, the ambitions of this company are obviously intergalactic, and people who've tried to bet against Elon Musk in the past have lost a lot of money doing so. So it's extremely risky, but it's also very exciting, and so that's what the underwriters are hoping investors will latch onto.
And what does, you mentioned Anthropic and OpenAI, they are expected to go public in the near future. What does this tell us, though, about the risks of an AI bubble? Many of these companies have yet to prove and demonstrate the public value of what they say their companies can do.
So I think it's a question of value versus actual technological change. There's no question that we're seeing with these AI companies a vast technological change that is going to alter the way many of us do our jobs and the way we live our lives. The question is, are they good investments for investors? Are they overhyped? Are they overpriced? Wall Street is extremely good at hyping up companies like this, where there's huge and vast technological change, but not a lot of profitability. And so, the pictures in the IPO prospectus for SpaceX are gorgeous. I mean, who doesn't love rockets taking off, or rockets coming back to Earth where you're catching the fuselage, or, Starlink happens to be a great business. So that's an interesting, but that's just part of the whole calculus here. So, we're talking about revolutionary change technologically, but out of this world valuations. So buyer beware.
Well, on that, you've written about the idea of the extreme brevity of financial memory. In our last few moments, how might that apply to what our viewers are considering?
Well, I mean, just remember how the internet was formed 25 years ago with all of these new companies going public, promising fiber optic cable across the whole world. And that fiber optic cable was built. Those companies, by and large, went bankrupt. So we continue to use that infrastructure, but those companies and people who invested them lost a lot of money. So I think we could have something similar here, but it's probably too early to tell.
All right, you heard it here first. Bill said, buyer beware. Bill, great to chat with you this Friday. Thanks for being with us.
Thank you.